Welcome back, everyone. Thank you for joining me today. The dollar is losing its shine, not necessarily in headlines, but in contracts and in investments. And that's where power really shifts, you would agree. In this episode, we'll discuss why more exporters around the world are saying no thanks to the US dollar and how the loss of confidence affects the US currency. Today, we're going to break down something that's not really supposed to happen in times of crisis. A weak US dollar is unusual. You've probably heard it before. The dollar is the world's safe haven. We've heard it so many times over and over again, and it used to be true. The rock everyone runs to when the world gets shaky. And here's the thing now, after Israel's attack on Iran, the dollar barely moved. And that silence speaks volumes. So let's unpack what's happening and why this time might really be different. So in theory, when geopolitical stresses rise, such as wars, strikes, financial panic, the dollar strengthens. That used to be the case historically. That's what we would expect to see. However, now is different. It used to be the case because global investors usually rushed into US assets, such as treasury bonds, cash, and dollar-denominated investments. But this time, not so much. Right before Israel's strike on Iran, the US dollar index had already hit a 3-year low. And since then, well, it's only rebounded by about 0.5%, which is really negligible. Meanwhile, gold spiked, oil moderately increased as well. Markets definitely felt the risk. So it's not that fear wasn't in the air. It certainly was. It's just that the dollar quite literally didn't really get the call. So this year alone, the dollar has lost roughly 10% of its relative value against major currencies. We typically say against a basket of major currencies. But here's what's really unusual about the situation. This isn't, being driven by interest rates or money supply. The Fed hasn't dramatically changed course. Growth in the United States hasn't suddenly cratered compared to Europe or Asia. So what's really driving this dollar weakness? Well, it comes down to two things: America's budget deficit and political volatility, or I would probably say instability. The United States is borrowing aggressively, and not just during recessions. We're talking about large structural deficits from one administration to the next. And that puts pressure on inflation expectations, and it makes international investors nervous. They don't like this. Add to that an unpredictable political backdrop with tariff threats, fiscal crisis, severe economic and political uncertainty, and you've got a recipe for eroding confidence in the US dollar. Such instability hurts businesses and it hurts governments. So let's zoom in on the deficit for a moment, because this is very important. When governments borrow too much, especially in a growing economy, it sends a troubling signal. If markets believe debt levels are becoming unsustainable, they will demand higher yields because their risk increased. So they will demand higher risk, or they stop buying altogether because they think, well, if we're not getting paid more, we're not going to risk our money. And while the United States can print its own currency, that only works as long as the world believes in the United States. As long as the world believes that the US dollar is stable, trustworthy, and backed by sound fiscal policy, which I think you would agree we actually don't really have. So right now, those beliefs are being tested. It's not just about the numbers anymore, it's about confidence. And that's not something that central banks can manipulate easily. Now, combine this with rising geopolitical risks like Israel's war on Iran, and the picture gets even worse. A weaker dollar in a time of global uncertainty isn't just unusual. It should be extremely, extremely concerning, because if the world is no longer rushing into dollars during moments of crisis, that raises a fundamental question that all of our politicians should be asking right now and should be researching and trying to fix. The question is, what replaces the dollar? A declining dollar can ease US exports, but it also raises import prices. And for countries that borrow in dollars, what happens to them? Well, a weaker US dollar should be a relief to them, but only if they trust that it will stay that way. The dollar's recent weakness isn't the result of traditional economic forces. It's being driven by something harder to measure. It's been driven by confidence erosion. Maybe not panic, maybe not collapse, at least not yet, but definitely considerable hesitation. In a recent article, Bloomberg reports that when the head of currency sales at US Bancorp talks to importers into the United States, she's hearing a recurrent theme. Foreign suppliers don't want dollars anymore, believe it or not. Instead, they're asking to be paid in euros. They're asking to be paid in yuan and in pesos, in anything, even in Canadian dollars. And we're not talking about theoretical discussions. This is real-world business. American companies are starting to settle bills in foreign currencies because their suppliers from overseas are demanding it. Just a few years ago, you may recall, the dollar was treated like gold in trade deals, and this would have been unthinkable completely. But now, US Bancorp says the vibe is totally different. The message from overseas vendors is becoming, just give us our local currency and keep your dollars. That's effectively what Bloomberg is writing about. And of course, it is surprising to many who haven't been keeping up with the news lately. So what changed? Well, the dollar has been on a bit of a roller coaster. After surging 7% at the end of 2024, it dropped around 8% this year, and this is according to Bloomberg's index. That kind of volatility makes life and business extremely challenging for exporters. Pricing becomes quite tricky, and in addition to that, earnings become unpredictable, and businesses can't stand that. And nobody really wants to wake up to a contract that suddenly dropped 2%, that suddenly lost 2% of its profitability because of a currency swing, which is likely to happen if you continue to limit yourself to settling transactions in US dollars. So foreign suppliers are doing what makes sense in the emerging multi-currency world. They are protecting themselves. They want stable income, and that means being paid in their own currency, not in King dollar, as it was once called. In interviews to Bloomberg, US exporters say it is difficult to quantify in real time, but across East Asia and Latin America, more and more exporters are requesting trade deals in local currencies or alternatives to the dollar. Even Citigroup has weighed in, saying that the US trade war may accelerate the shift, especially if new trade blocs emerge between countries in Asia and Latin America. And we know that BRICS is working on its expansion in Latin America. Let's not forget, from 1999 to 2019, nearly every export invoice in the Americas was dollar denominated. Dollar was indeed king. That's no longer the case. Europe, thanks to its intra-EU trade, already saw much lower dollar usage, which of course proved to be very beneficial for euro. So this isn't about the dollar vanishing overnight, don't get me wrong. It's about erosion, invoice by invoice, contract by contract, and erosion of trust in the US system as a whole. The dollar's role in trade is one of the foundations of its global dominance. When that role begins to erode, as we see now, even a little, it can ripple through the entire system, from US borrowing costs to reserve demand to geopolitical influence. At this time, the dollar is still the world's most used currency, but it is changing. If more exporters stop accepting it, or even just prefer alternatives and actually do request alternatives, that tells us something deeper. And this is a shift that is bound to be very bad for the United States in the long run. As US Bancorp puts it, the change in tone speaks to the dollar's reputation, and reputation, especially in global finance, is everything. Is this the beginning of the end for the dollar's trade dominance, or just a temporary response to recent volatility? We know that the structural shift in power also impacts the use of the dollar and its hegemony in the long run. So let me know what you think in the comments below. Thank you very much for taking the time to join me. Remember to show your support, like, subscribe, and share. It goes a long way. It means a lot to me. I put so much work into my content. Also, support my work on Substack and Patreon. You will find those links in the description below. I look forward to seeing you in the comments, and I will see you back here tomorrow. Bye for now.